Hey, what's up, YouTube? It's me, Lone Zodiac from investeckelberg. Um, it's my first weekly recap video. Today's Sunday, June 16th, and we're going to talk about natural gas, what it did this week, what can we can possibly expect next week, which is only one day away. And we're also going to talk about a couple of long positions that we're going to start considering as a company. Um, as to what we suggest people should put their money in and what stocks they should go long on. You know, if you're investing significant amount of money, 500,000, million, 2 million, maybe you have a $10 million portfolio. You know, it doesn't matter how much money it is, but you know, eventually when you're trading big money like that, you want to leverage and take positions all over the place and go long and go short. So we're gonna talk about a couple things. Um, you know, natural gas this week was certainly interesting. It tested support, found a top, it hit resistance. Um, but overall, it's still bearish. It's not looking bullish right now, at least not yet. And there's a lot of reason as to how we come to this conclusion. Um, it's basically because it's basically because like we saw in April that it spent a whole month looking for a bottom, and we're only about 2 weeks into June, a little bit more than that, and we haven't really been bullish because first of all we had a double bull confirmation on ugaz in April. Okay, we had a double bull confirmation with. I love that nasty. I got $59 that come in this out one. Yeah. So I'm about to get some. So you know we had a very bullish confirmation on ugaz in the month of April, and that's what really determined where natural gas was going to go. And we had a double confirmation of this, and I'll show you. We haven't had a double confirmation yet for the month of June in ugaz. So in the month of April, we got double confirmation. First, we have this really huge sell-off. All right, it took the whole month for it to find a bottom, basically. And the first confirmation for a bullish trend was this formation right here. These two candles, this one and this one, two, that are green with the red in between. Okay, that's the first bullish indicator. And then you got this gap up. Okay, once you had the gap up, that was the second bullish confirmation that we needed to know that this was either going to curl down a little bit or was going to go up. Either way, you could have took a position on ugaz at $24 and came out at this top right here, which is $26. You would have made around 2 points. All right, you would have made a point and a half, which would be awesome. Okay, and then later on, a couple, 3 or 4 days later, you would have been able to come in at 23 and come out at this top at 27. All right, which is a lot, which is I think 20%. All right, so yeah, that's the confirmation. We're looking for more confirmation to grant us these types of opportunities. Okay, the two opportunities that we had, the next two big trades that we had, okay, were those two after a double confirmation that we're looking for. So due to that, we're not eager to get in UJZ right now. We only have one positive sign, and it's not very positive right now because it's creating indecision. And like I said, when natural gas has indecision, it's usually bearish. And like I also said, UJZ needs to stay above 1864 for us to consider anything on it. Anything. And that would be small position to begin with. Okay, so that's that. That's the first thing that we're going to talk about. All right, we're going to talk about how do we trade this next week. And the only way we understand how to trade this next week is if we understand what happened this week. All right, so right now we're going to look at the UNG chart. We're going to switch this to the 15-minute so we can see the volatility and look to see if it wants to squeeze anywhere. Okay, as of right now, where it wants to squeeze is right here. Okay, it wants to squeeze here. And I'll be honest with you, I really believe that natural gas has to test support at 232 again in order to really, really be bullish. All right, and it bounced off of 232. I said, watch out, looks like UJZ may test support. I said that on one of my stock twits, and that's what happened. It bounced at 232. Okay, so 232, we got this big rally here, which was a 6-cent rally, by the way, and it didn't touch 240. Okay, and 240, I guess, would have brought our UNG up to this range over here. Okay, but as you can see, UNG is now doing what, folks? It's floating. It's floating, and it's starting to show signs that it's overbought over here. Okay, on the bottom. So it needs to settle out just a little bit. This needs to settle out just a little bit. And do we have signs of a fadeaway here? We have a little bit of fadeaway, tiny little bit. But we do have bullish patterns here, and it does possibly can squeeze at this range, and it needs to touch down here if it's really want to stay bullish. All right, so that's why we took a long position. Right now we're long dgaz, folks, because it's too early to switch, and we could risk some of our 38%. Some of us have 58% profits right now this month. So we can take the risk, and it's too early to switch. And like I said, right now we're looking at the 15-minute to see if this chart looks like it wants to squeeze. We're looking for volatility, and it looks like it really does want to squeeze at $20, but it's only 15 cents from where it is right now. Okay, so that'll be that's going to be the first level that we're going to look at on Monday. Monday we're going to start eyeing this once it gets to 2030. Okay, I'm pretty sure it will. If it doesn't, then it's going to be a new trading range. And, if this starts trading at a new trading range, the top of the range is here, which is almost $21, which is about 5% almost. Okay. It's 50 cents, so it's 2.5%. So 2.5% gain on UNG, all right, would be the top of the first range. That'll be the first target in case we do get this pop here. But we're not going to trade it probably. Okay, and like I said, we got a huge 7% gain on UJZ. We did not trade UJZ on Friday because I wasn't trying to cheat on DJZ after we made a very, very large projection on it. And I could have made some money on it, but I didn't want to. Okay, and here's the thing, folks. I said that support on DJZ is going to be $150.20. Look what happened, folks. It popped. It bounced right off that support. Okay? It bounced right off that support. And the reason I knew this was support was because of here and because of here. All right? And I knew it was going to fade away. Like this support right here, is 150.91, but I knew 150.91 was just a little too high. As you can see, this little, it was right here, 1520. It was about right here. It's good. Here it is, 1520, 150.20. It was perfect. It was perfect. All right, for the day. Because then what happened? When he got 150.20, he would have came out at 150.20, got out 53. He would have made 3 points. Okay, you would have made 3 points on that call. And then you would have made another 2 points after hours if you wanted to. So we still had 3 points trading DJZ in here. And we didn't really need the 7% on UJZ. But if you did trade UJZ and you made that move, then that's what's up. Obviously. All right, so, right here we're looking at the 15-minute chart, looking for volatility. Where does it want to squeeze? And so far we're in an area where it's support, looking to squeeze. And you're going to hear me say these things a lot, and it doesn't change very much. It's always some sort of support or resistance that can possibly squeeze. All right, but a squeeze is when you have a certain amount of consolidation. All right, not a bear flag. Like this here is not a squeeze. Okay, because it's a bear flag. But look, consolidation here and a squeeze. So, we have consolidation and squeeze. So it's consolidation and squeezing, folks. And if it's a really volatile set of movements, then it'll squeeze at the 50% of those tops and bottoms, which are the retracements. All right, so this is how we're looking. So technically speaking on the charts, we're looking good on DJZ. Okay, what else? We are bullish on natural gas, only above $2.42. A lot of people are going to say it's $2.40. And trust me, a lot of people are talking about how bullish natural gas is. And I'm not on that boat right now. I'm not. I'm bearish. Everybody knows I'm a bear. I'm like the only one talking bearish about it. But trust me, the lack of Chinese demand is going to drive natural gas prices down. And also the charts. And people are going to trade this a certain way because they want to make the most amount of money. And, there's a larger incentive for people to be bearish on natural gas right now due to the fact that we can make more money on it than by being bullish on UJZ. So that's how we're playing. We're also playing out the psychology aspect of the market. All right, but this is right here is the daily chart of DJZ since December of last year. And you can see it was a headache from March to April. Okay, April to May it was a headache. In May it wasn't too hard to trade. In June was easy. Now it's proving that it's going to test our wits a little bit. All right, so what we saw was bullish flags, a lot of momentum, retracements looking for curls, and then support on the trend line. So if that pattern plays out here, we're going to have support at the trend line, or it's going to go slightly under and hit the 60-day moving average, and then continue to go up. All right, that's what we've learned this year so far. All right, it's only taken one major dip, which was this right here. Okay, this was the dip under the trend line. But the market proved that it wanted a lower price on natural gas. Okay, so you see that right there. All right. So that's the trend, and when you see this part of the trend if you look at the trend line from April to June, it wants to squeeze as it's going up and down that trend line, which is what led to the price action in June. Okay. So since that's happening, it needs to oscillate. All right, you got to think of everything as an oscillating triangle. All right, oscillating triangle. We're looking for oscillating triangles, and I can't really draw it right now, but this stock has to start oscillating. Oscillating. I don't know if I'm saying it right. I know how to spell the word oscillating triangle. All right, that's what we're looking for, and so you'll see like this kind of looks like a triangle. Okay, you draw a line here, draw a line there, in there. It means you get two triangles, or you get a triangle there, and then you got to imagine the triangle spinning a little bit. That's where you would draw the angle, the points of the triangle. Okay, so you got to imagine everything as a oscillating triangle here, and you'll be able to understand that this is a top, this will be a bottom, this will be a top, this will be a bottom, and you'll get that pattern. Okay, but it looks like DJZ wants to go up before it shows any consolidation. All right, and it kind of looked like consolidation at certain points in time, but so far it hasn't been so much. And if I pull up the charts for the months, a lot of previous months, maybe you'll see it, but we've had a lot of consolidation trading these ETNs the last couple of years during the summer months. All right, it's always been a consolidated summer, and at some point it will consolidate. All right, so this week, what are we looking for? We're looking for DJZ to go up. All right, we want it to go above 164 to really stay bullish longer term on it. Natural gas might test 232 again. That's what we're looking for. We're looking for it to close at 226, $2.26 by the end of the week. Natural gas can go up above 242. If it does go above 242, how much momentum did it really take to get up there? And if it did take a lot, then we're going to just be careful before we do make the switch. And we'll make the switch if we have to, folks, but I don't want to, obviously. I want to be correct on my trade here, my target and everything like that, so we can really make an epic target and prediction, and a really great video and great start to what investeckelberg is. Last year I made my first publication under that name, and it was a 30% rally in 1 week, and I was only 32 or 34 cents off from me doing the derivative. Okay, and what happened was it was the best prediction I've made under that name. So now I'm back again this year, and then I stopped doing that because I didn't get any donations from the community. I'm sure a lot of people benefited from my picks, that I decided not to do them anymore. Now I'm back to do them again, and this time I'm just doing it for myself basically. But I would appreciate any sort of PayPal money donations if you do, or if you are one of my followers and you're making good money. Would appreciate it. But I'm making money trading anyways, so don't worry about me too much. So, here's the thing. When we're trading DJZ, we just want to know, is it going to be a bear flag? Is it going to be a bull flag? All right. So far, it's looking like a bull flag, okay, coming out of this. And I'll tell you why. All right, I'll tell you why. We did not get a lower low, okay? We got the same low, all right? We got the same low here, so therefore the next candle should probably be green up here, all right? And that's why I say that. And I could be very, very wrong by saying that, and this is not necessarily enough, but it's what we're saying right now, okay? It's what we're saying right now. And once we change that, then we got to make sure we're not chasing. So if we miss the next day here, all right, we just got to make sure that on Tuesday we're not chasing, which means are we over here and then looking for this, and then we get in this. You know what I mean? If this happens, and then we get in this, and then this happens, and then this happens. What I'm saying is, don't worry about being. If you're wrong one day, don't make the switch the next day or the same day. Wait 2 days before you make the switch. All right, always wait 2 days before you make the switch because you might get caught chasing, and then there could be a squeeze in there somewhere. And then if it's a bearish flag, you're gonna miss the day to buy. Okay, trust me. That's why we didn't switch to UGAZ on Friday because could have been a miss. Could have been a really big miss, and I don't want to get into it too much, but I hope you can imagine where those candles would have been had we not missed. Understand? So if we'd not missed DJZ, although we didn't take it, then it would have been at 164. So then we would have missed the candle. Okay, so I mean, it's kind of what I'm talking about, but you might not understand what it is that I'm talking about that much because it sounds a little complicated. What I'm saying is if you make one bad swing trade, don't be so quick to make another swing trade just because you think that the trend has changed, because it might not have. And that's why you should wait 2 days. Always wait for the trend to settle. So if you think you know the trend but you were wrong the next day, then another 2 days of not trading the trend the way you thought is going to show you the trend. So don't worry about being wrong and then switching the next day. You have to be patient. You have to be patient. So, if it's the first time you're watching my video, you're thinking about taking a pick here, just remember, if you started following me earlier, you would have been up 38 up to 58% this month. So then you would know how to take these risks accordingly. All right. So right now is a very risky time in the market to go for a swing play. But we do suggest you swing DGAZ from Friday. So that's what we're looking for right now. Okay, we're looking for this action up here, so we can get back into those targets, which is the first target is 177, by the way, 168, and then 177. All right, 164, 168, and 177. Those are the targets that we're looking for. All right, we might have to go 172, but that's only if we don't have as much momentum as we want to expect. All right, so right now the market is good for DJZ, bad for UGAZ because natural gas is under $2.40. Chinese lack of demand is going to drive the market down. This weakening of their currency is going to drive the market down. And now we want to get into some interesting thing. By the way, I am completely out of my TVIX trade. I shouldn't have got out, but I did. I should have held a little bit longer, risked another 50 cents, which would have been more of a loss possibly, but I should have took that risk anyways, but I didn't. And now we're going to talk about some stocks that we want to go long on. All right, the first one being Petrobras. I think I talked about this a little bit in my last video, and I did an analysis video on it, and I will do a separate video on 3 or 4 stocks that we're going to be taking long positions on and suggesting them to our clients and to anyone who's one of our followers to consider. The first one is Petrobras. As you can see, it's just technical bullish flag looking to break out from this trend line, and it's got a top here. The first top is 17, and we're willing to put a $22 price target on this stock, which it hasn't seen since 2014. Okay, which would be awesome. But you can see the year, just if you look at the whole chart here from the yearly standpoint, it's only gone under this particular trend line a few times, as you can see right here. See this part of that trend line, it goes under here. It's the only part that really goes under that trend line. So it's only gone under twice. So we're willing to put a significant buy rating of 1503, and we already announced that on our website. And that's that, just based on the charts. The news is that this company is divesting. Okay, they're selling assets as far as oil refinery to consider more oil exploration. All right, so they're probably going to go into the natural gas route at some point in time, and if they divest their assets and they find a lot of oil and gas and things like that, then they can make new oil refineries if they have to, depending on how much money they've already spent, things like that. So it's not a bad move, and major banks Santander, I don't know, other ones as well. They would probably be interested in buying up those oil refineries that they had, and that would be good for the market, good for Santander, good for the Latino market because the Latino market, benefits a lot from working with Santander because Santander's this is where they find one of their homes to be, so they don't have to necessarily send money back in euro so much. So their earnings here just is important due to that. All right, the next stock we're going to take a long position on. We're going to be talking about long position. I said I was going to talk about the energy sector first, and yeah, I was going to talk about the energy sector first. I'm going to give out those plays. The first one is Petrobras, and then we're going to talk about some couple liquefied natural gas companies that are based in the United States, such as Tellurian. But I will be honest with you, regardless of how those stocks look on the charts, that market is going to start getting saturated, folks. There's like about 8 or 4 new LNG, liquefied natural gas plants being built. Some are going to go operational this year or next year in Louisiana and other places in the United States, the lower states of the United States. And the market's going to get saturated, so I don't expect all of those companies to go up so quickly. But some of them would be going up faster than others if the market wasn't so saturated. And I don't know why the United States is doing that, but they really have the urge to do that. So they're doing that, and they're also building a lot of pipelines. All right, so the next one we're going to talk about is Santander, folks. And this stock is a monster, and I love it. I've always talked about Santander. Um, I've mentioned Santander before. I think in 2014, I said it's time to buy Santander, go long Santander, and it was like $5 a share, and it went up to $10. And I said I put a price target of 10, and then it almost went to 10. I think it went to 10 back then, and then I said it again. I said it twice. I said, look, time to buy Santander, price target of 9 or 10, and it went there. And now, we're thinking about doing it again. And Santander is a strong stock, and it shows weaknesses and then it shows its strength, but it always comes out a winner, folks. And even if you know this is a top here, you could have shorted it a lot and you would have been able to make a lot of money. And we're back in those playing zones. Okay, and this is in 440 is a price that gets tested, folks. And 440 to 7 is about 50% or so. And we're willing to put a $10 price target on this is because Santander eventually, folks, they're going to drop some good news. They're going to drop some good news. Brazil's economy, sure, is, it's not the best right now. Unemployment is absolutely awful. All right, but essentially, banks will always stand to benefit one way or another. Okay, they'll always find a way to restructure what they do. They're always going to have capital, and people are going to use them. All right. Brazilians are, they're very, very selective group of people. They have a lot of nationalism. They don't necessarily like other banks coming here and companies and things like that. And they'll tend to choose like Bank of Brazil and other companies to put their money in. But trust me, when I go to the bank here and I do use Santander, there's like a lot of people there all the time. So it's kind of like a 50-50 aspect to that, but I really do believe this is a good bank and a good position to benefit. And they'll make more money if the Brazilian currency goes up in value, but regardless, their stock doesn't depend on that. Their stock depends in Europe. All right, they're Spanish. They're based in Spain. They're a bank based in Spain. King Ferdinand II from Spain. I think he has like $200 million in this bank and stuff. And it's an important stock, and they benefit more from Spain. All right, Spain's a very rich country. It's an awesome country. It's a beautiful country. The eastern part of Spain is more rich than the other part, and they kind of want to break away from their country. But Santander's going to benefit, and Santander has a lot of operations in the United States, especially in New York, and this is a company that's not going to just lag. And look, $4.42 a share is very undervalued. I mean, think about Bank of America. Bank of America was $2.46 in 2008, and now it's $16 a share. So, this stock has that type of potential. And Spain's a country with a good, strong GNI. They have a very strong GNI, and they're not the biggest country in the world, so they're going to have less pressure, okay, to have the necessity to outperform. And they operate in Mexico, all of Latin America, all right, and Europe, and so they're ahead of the curve, and it's extremely undervalued. Not a lot of banks here from other countries that other there's not a lot of other European. I don't know of any other European banks that operate in Brazil other than Santander or American banks. So Santander is the way to go. All right, if you really believe that Petrobras is going to do well, then you might as well believe Santander is going to do well too. All right, even though a lot of Brazilian banks are going to try to acquire Petrobras' assets, it wouldn't surprise me if Santander goes up too. All right, and based on that, based on historical context of them, we're willing to put a price target of $10 on Santander, and you can get out any point in time. So it's a really good play. It's a really good play. The next one is AMD. AMD is a monster. Has been a monster this year. I put a buy rating in AMD a long time ago. 2013, I said time to go all in on AMD, and back then it was $5 a share, I believe. In 2013, yeah, it was right here. It was $5 a share. Look at that. It was at one. It was at $2 a share. AMD was $2 a share 2016, and now you see it's at $30 a share over here. All right, so it's been a monster. The stock is a monster. It's a monster, folks. And it's done big pullback, a huge pullback, 50% before. All right, just major sell off. I don't know why the sell off happened here. Okay, late mid 2018. I don't know why, but it did. All right, but now it's back and it's a monster. All right. The reason it's been a monster lately is because a lot of the chips, computer chips that they're making, all right, are just people are saying that they're better than Intel's. All right, and so because of that, that's driven the stock to go up this year. Okay, and as you can see from June 3rd, which is right here, okay, it did 25%. So it's starting to retrace here. All right, and this is a good time to get in because it's at a 50% retracement. All right, so this is something we're willing to announce, and we're looking for like a $45, $60 price target on this. And the reason why is because their sales are going to go up. Their sales should probably go up significantly over the next 3 or 2 years because they have announced that they're going to be making the computer chips for PlayStation 5 and the new Xbox next generation consoles coming out. All right, so Petrobras, AMD, Santander, those are the stocks that we want to go long on, folks. All right, those are stocks that we're looking to go long on right now. This can change at any time. And we're going to throw Tesla into the mix here. I like Tesla a lot. I've always said buy Tesla at 180. I've been saying that ever since it hit 180. Been saying that forever. And we're looking for like a 250 price target here. All right, we're looking for a 250 price target. And it's realistic. It's realistic. The clock is ticking on Tesla. Okay? But it's gonna get the squeeze here. It's probably gonna get the squeeze here because a lot of people are gonna start buying it because it's low. It's low price according to its float, historically speaking. Okay, it's about 40% below its all-time high or so. No, it's about 60% from its all-time low, all-time high. So since it went so low, it can do a 20% rally here. Okay, it's already almost there, and it can do it. Okay, so that's what we're looking for in Tesla. We're looking for 250 Tesla, which would be awesome. And you can see it's just from 180 to this range, it likes to squeeze. So that's how we're trading it. We're trading it based on the chart, but we totally understand that it's very volatile. Moves on earnings and earning reports, and also the clock is ticking. They're running out of cash. So those are the four companies we want to go long on. We're gonna do a talk about these liquefied natural gas companies, but I'm losing a lot of hope in these companies because right now this company Tellurian, all right, this is a fantastic stock. Okay, as you can see, it did a major rally here. All right, the triple this price from that type. That price it tripled, went down a lot, and then it became this monster right here. Okay, 2016, $2 a share, all the way to $22 a share. So went up 10 times, and then it had this consolidation, sell-off, rally, combination of things going on in 2008, and it doubled a few times and looked technical and didn't really actually look technical because it had lower lows, but it did look technical as it was always looking for a squeeze. It's always looking for a squeeze, and it always found a way to squeeze above the 50% retracement. So it was technical to that regard. All right, so right now we're just not as bullish as we want to be on this stock because we know there's going to be a lot more companies that are coming into this arena. All right, Tellurian is a fantastic company. It's just that now the market's going to be saturated with other liquefied natural gas exporting companies, okay, producing companies. And here's the good news, folks. When natural gas prices go down, Tellurian stands to benefit, okay? And they have to buy natural gas very low, and they have to liquefy it, and they have to export it. The benefit of having liquefied natural gas is that you're able to store more natural gas that way than if it wasn't. All right, so if you're China or any other country looking to store natural gas, you're going to want liquefied natural gas so you can store more of it. And if you're a company like Tellurian, you want to buy it as cheap as possible so you could sell more, at compressed amount, liquefied amount at a higher price. And if natural gas is priced too high, then it becomes a little harder to do. Other countries won't buy as much, other companies won't buy as much from you either. And so that's not a good thing. It's not a good thing. Okay? And natural gas right now, we're not necessarily sure if it's the dollar has something to do with it, oil prices have something to do with it, but as of right now, the energy sector is hurting. Okay, and Tellurian is a company that we think can get to $9 a share, $10 a share from this point where it is now. But it's something that we're not very confident of because we really think it can go back down to about 503. All right, 503 is something that can happen. So right now we have a hold rating. We actually have a hold rating on TELL. We have a hold rating here. We don't have a sell rating. We don't have a buy rating. We have a hold rating. And this is something that we'll look at every week to know if we should put a buy rating or we should put a sell rating. And I'm not going to go through all the companies out there because I don't want to make these videos too long. But thanks for following me on Facebook, on YouTube, on stocktwits.com. All right, it's me, Lone Zodiac, at investeckelberg. And this is what we do. And next week, don't forget, we're looking for natural gas to go to $2.26 a share. We're looking to see if it's going to bounce at 232, if it's going to test support at 232. And we really think at our company that it does need to test support one more time before it ever rallies further to past 240. $2.40 or $2.42. And if it goes above 242, it needs to really hold above $2.46 for a significant amount of time for us to consider it going to $3 ever again. Okay, which I'm sure it will go at some point in time, but I mean by ever again this year. Okay, because remember we're looking to make about 2 or 3, 4, 5 trades by November and come out with 300% of our portfolio positive. Okay, that's what we're looking to do, and that's only on natural gas ETNs. Okay, that's what we're looking to do. And AMD is a good stock. Petrobras is a good stock. Tesla is a good stock. Santander is a good stock. And there's a few others. Okay, we're going to talk about energy sector just a little bit more. But these companies are futuristic. All right, they're in the future. This Plug is a great company. It's a company that I've profited on a lot this year. I made actually last year and this year, I made a lot of money trading this. I made about 50% or so, and I took a long position on Plug, and I came out big on it. And Plug is great. It's volatile, moves on news and earnings, and also it's in the future. It's a battery company that makes hydrogen batteries or something, hydrogen proton batteries or something like that. I don't know. They make batteries and they do stuff with hydrogen. So they're a good company in the future, and they're very, very undervalued. Okay, you could see there that it's just $2.50, and 20 years from now, hydrogen becomes the future. This stock will be worth at least $70 a share. So this is good. And we like Fuel Cell, F-Cell. Okay, F-Cell and Plug, they're both companies that do this hydrogen fuel thing. And F-Cell was valued very, very high. Okay, you can see it was like $300 a share over here, and it's been going, and it went down it's an insane amount ever since 2015. But we know that this company's in the future. This company's in the future, and it's currently at 36 cents a share. All right, I think it went down to 35 the other day. See, it was at 35 cents a share. And this is a company in the future could be trading $100, $200, $300 a share in the future. Okay, in the future we mean 5, 10, 20 years. Okay, because when natural gas, after natural gas, it's going to be hydrogen. All right, so this company is already on hydrogen. So is Plug. So these are the companies that we want to take long positions on. After the revolution, so to say, of natural gas and the renaissance of natural gas. But it was recent where F-Cell was $11 a share. All right, so this massive sell-off, I think, has to do with sales and debt and things like that. Okay, but eventually the stock will be worth a lot. So something to consider, but it's not something we suggest because only if you have a lot of money and you're ready to go long on those plays. But you probably stand to benefit more from the other ones. So benefit from those other ones now, and then later take those plays long. Alright, so that's what we're looking to do. Next week, 226 natural gas. Figure out if it's going to stay above $2.40, $2.42. Natural gas is either going to go gap up or gap down. We believe it's going to gap down. That's what we announced on Friday. If we lose, we lose. Well, we got 38% earnings. A lot of us have 58%. And so we're willing to risk 3, 5, 2% of that 38, and we're gonna be able to catch a knife regardless. A lot of people talking about how bullish natural gas is going to be next week. We don't think so. Chinese demand is not yet factored in. All right, so that's what it is, folks. And we're going to see if we're going to get consolidation or not, or if we're going to hit those tops on dgaz that we're looking for, those price targets, 164, 168, 172, 177. Those are going to be price targets that we're looking for. All right, depending upon the momentum All right, and where it wants to squeeze. As long as ugaz is below 1864, it's gonna be accelerating. All right, and that's it, folks. All right, it's Lone Zodiac. It's been real, and talk to y'all tomorrow.